Hello and welcome to another Market Outlook Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and I am making this video after the first trading day of 2015. And the topic of this video is really the year-to-date column, which we've just added to this sector summary section of Little Big View. And I'm going to come back to this little column here, this year-to-date section. Before I get into that, I just want to take a quick look at where we are in the overall markets here to give a little context in terms of how powerful that year-to-date column is going to be for the next several weeks, most likely. So we're looking at what I call my Market Watch page, and I call it that because I've got the SPYs. This should be the diamonds. I'll pull that up. XLB. I'll explain that in 1 second. But let's go to the diamonds. So I've got the SPYs in the upper left, diamonds in the lower left, Qs upper right, IWMs lower right, and I'm not going to go over this in detail. Keith will do that in his weekly Outlook video, which will come out sometime over the weekend, and I do it in other videos. What I want to point out, though, is just where the market sits right now is a really dynamic situation for a couple of very obvious reasons. One, at the end of last year, a couple days ago, SPYs made a new all-time high. So did the Dow. Media was all over that. IWM, I believe, did too, just barely, but more importantly, it broke out of a major base here. Meanwhile, the Qs diverged, right? They did not make a new high. So the last day of the year was a rough one. Market sold off pretty nicely, bringing it back under this green line, which is the 10. And today, first day of the year, which is a Friday, should have really been a pretty quiet day. And in fact, it was, but you could see the volume was about average. Not bad for a holiday day, but not huge either. Pulled right back to the 50 on the SPYs. Broke the 50, but held it on the Qs, and IWM is nowhere near the 50, but came right back to the top of this consolidation. In all cases, it managed to rescue itself. Didn't close on the lows, but I would say it's a pretty indecisive day in terms of which way the markets go next. All these markets are in very different locations. If I blow out the IWMs, you can see more of the highs that it's bumping up against. So are the highs going to break out of basically the 2014 highs, which would be, this is almost an entire year of consolidation in here on IWM. So if that breaks out, that's pretty significant. If the SPYs roll over, they're rolling over after what could look like a double top. And the same thing could be said for the for the Dow on the left. And the Qs, of course, didn't make that double top because they diverged. So what's going to happen? Well, regardless of what happens in these four indexes here, even though it will be the driving representation of what's happening, the real action, and maybe even the best way to figure out what the overall market's going to do, is going to be to look at the individual sectors. And that's what makes this page so powerful in general. All right, again, this is Little Big View. So if this is the first time you're seeing this, you can get this at marketgauge.com completely free. Just go to the resources section here and then Little Big View. You'll wind up on the market overview section. I jump to the sector summary. I like to keep these videos short, so I jumped right there for you. And you're seeing this in the trades and tutorials section. So if you've been looking at this page for a while, great. If you have, then you probably noticed in the last couple days we changed it to include the year-to-date, and the reason for that is because the year-to-date performance is going to be really important for the next couple days, next couple weeks, depending on how the market plays out. Now, you'll know this if you've been part of our recent education on calendar ranges. If you don't have any idea what I'm talking about in terms of the calendar and the January, really the January trade patterns is what I've been referring to them as. You can see a link in the text above this video. That link's only going to be there until the end of this weekend. After that, it will disappear. So if you're looking at this in the future as a recording, and you don't see the link, sorry, the special offer ends on Sunday at midnight, and that's Sunday, probably the 3rd, 4th, at midnight. So, and there's 3 strategies involved there: opening range based, triple play indicators, and a January trend trading patterns. And part of the January trend trading patterns is how the market performs year to date, right in the beginning, couple days and couple weeks of the year. Now, without even knowing any of that, or any of the details of it, what you do want to watch is which industry groups are leading for the right out of the gate in the year, because things can change on a dime. Now, I don't know if this is any foreshadowing, but the way this table is organized is it puts the strongest 6-month performers on top. So the best performers over the last 6 months are on the top and the worst ones at the bottom. So energy, we all have seen that totally collapse. So this isn't surprising anyone, I'm sure. But notice that the 2 worst performing groups over the last 6 months are up today. And up 1%, that's not really all that impressive. Up 0.5%, not so bad when the SPYs were down fractionally, but you saw how down the markets were. That's why I took you to that page. So you want to pay attention to see if there's going to be a shift in leadership, and you can do that most importantly at this time of the year with the year-to-date column. But you'll also see it in the context of how they've been trading over the last 3 and 6 months. Now, the other interesting thing that happened today is the strongest group here, real estate, has been strong over the last 3 months, stronger over the last 3 months than the last 6, so it's gaining momentum. Now, that could be because interest rates dropped pretty significantly today, but that's not entirely correlated in that particular way. So there's one to keep an eye on, which is basically in the middle of the pack. And the other thing we're going to want to watch coming right out of the gate again is whether the groups that have been leading over the last 6 months continue to move up, or do they get hit like they did today. So down over 0.5% in the transportation, over 0.5% in the retail. We want to see whether or not they hold up. Healthcare held up nicely. So the things that are really interesting, really stick out to me today on the first day of trading, we'll have to see if this continues over the next couple days, is the following. One of the stronger groups of last year, healthcare, was strong today even in a weak environment. Real estate, which has been strong, was strong last year, but the last 6 months has trailed off a little bit, was strong today. It's been a strong performer, so maybe that's reasserting some of its existing momentum, just hasn't been in the top. And then on a weekday in the market, energy holds up. So a lot of people out there are looking at energy to see whether or not this is going to form a bottom after getting so crushed. This is one area, one quick page, you'll be able to watch that really easily. So I hope this sector summary page comes in helpful to you. Hope you pay attention to the year-to-date column. And if you do want to learn more about the January trend patterns, use the link in the text above. Like I said, it's 3 different strategies, special holiday special that's going till midnight of Sunday. With that, I hope you're all having a very happy new year and look forward to helping you in 2015 with these trades and tutorials video. That's it for now. I'll see you in the next video.